right. Thanks for tuning in, guys. So, the US and Iran actually came with an agreement um, to get the Strait of Hormuz open, right? So, the US and Iran have agreed on a framework deal to end the war, and it will be signed on Friday in Switzerland. So, obviously, compared to the back and forth that we've been getting, this clearly is very, very bullish. Um, Now, the key thing that we need to be aware of is that it's not signed yet, right? So, they are planning to sign it on Friday in Switzerland. Um, and yeah, so I mean, this is a very key date that we all have to remember, right? Because until this is signed, then this is just talks, right? I mean, I'm not saying that it's not going to happen, but like I said, we've been through this back and forth with Iran and the US for a while now. And, anything can really happen within the week. There could be some issues that they do not agree on. They can change their minds easily here, um, whenever they want. Right? That's just the market that we're in right now, and that's the political landscape we have. Right? But yeah. But for now, this is extremely bullish, and obviously, Donald Trump says that part of the agreement that the Strait of Hormuz will be reopened. Right? Iran looks at this very positively. Obviously, the agreement had been made according to Pakistan, right, which is the mediator between both of the Iran and the U.S. side. Um, Says military operations on all fronts, including Lebanon, will end, but Israel is yet to commend, right? So a couple of things are very important. Um, you know, the nuclear side, right? Trump wants Iran to essentially give up on their nuclear projects and essentially surrender them to the US. And at the same time, Iran wants the war in Lebanon to end, right? Which I think Trump seems rather open to that idea, obviously. I mean, from previous sources of the back and forth between Israel and Trump as well, right? What Trump has said to Netanyahu and etc. But whatever. Anyways, so that's I mean, those are the few things that we need to see, right? But if they've agreed on something, then it's probably a very positive thing, right? And that's great, right? Um, or not probably, but it's obviously a positive thing. But like I said, we want to keep an eye on Friday. Um, so yeah, that's what's happening right now. So obviously, how did this affect the markets? Well, it's very bullish for stocks. We can see that very clearly here on pretty much all of the global indices here: China, Germany, the FTSE, Dow, the S&P, Nasdaq, the Russell as well, which are small cap companies, the Nikkei. Great winners here. Nikkei, one of the main ones that are actually doing extremely well right now. Um, it's kind of sad because I was actually looking for. I remember I was trying to long, I think somewhere around here, and now look, that's just phenomenal, right? We tapped right into that 200 moving average, and it's just been moving really, really nicely here. I believe the drawdown was pretty big, right? Yeah, about 10% draw, but it's relatively normal for the Nikkei to drop about 10%. The US would usually be about 5%, which is sort of what we got on the Nasdaq here. I believe. Oh no, actually, excuse me. Sorry, we actually went a lot higher than 5%. Yeah, but 5 to 10% is relatively normal for the indices. Excuse me. I have no idea why I thought it was 5%. Wait, is it the Dow? Yeah, it was the Dow. Excuse me. Got completely. Oh, not the Dow. The S&P. Um, the US 30 roughly would probably be around the same as well. Yeah, sorry, I got it mixed up. So, yeah. So in any case, Bitcoin's also moving here. I mean, we've been down pretty aggressively here from the highs. I mean, even to current price, it's still a 50% drop. I mean, could Bitcoin be a good buy right now? I don't know. I mean, depends. I mean, we have so much eyes on AI and in the tech side that Bitcoin has really just lost its steam in everything pretty much. Even when inflation was actually starting to weaken, Bitcoin didn't really do much. I mean, for the most part, it did move when things started to ease, but ever since the AI's side kind of came through, everything it just kind of fell. Everyone just started to shift their capital flows into stocks, individual names. So yeah, we've been seeing crazy runners on that. So I think the interest has really shifted away from Bitcoin because Bitcoin at the end of the day doesn't. I mean, personally, this is just a personal opinion. No one is really using this, to be honest with you, right? But it's still something that will last as a benchmark. I mean, it is a great risk on indicator as well, but this is, you know, very, very different from kind of the other beta assets that we have that are, um, that are connected with the stocks and indices side, right? So another interesting thing is, yeah, all obviously is selling off here. Very, very nice move to the downside. We are tapping into that 200 MA, but obviously as things progress, and if Friday actually gets signed, very likely we'll see oil come back to pre-war levels, I guess you can say. So this is a nice move. I mean, we kind of took out this area of support here. Um, Not really, to be honest, but we look like we're actually shifting and moving to potentially take that out, but we're still elevated. The movement of the oil market compared to when the war started, as you can see, was relatively high, right? 77%. But if you look currently, I mean, we're only really down about 26%, right? To me, that really just feels like the market is optimistic, obviously, but they haven't fully got rid of the inflation idea, if that makes sense, right? Because regardless, even if we get a ceasefire, inflation is still gonna last at least within the year, because obviously, a lot of the inflation that's you know found in energy has a lag in terms of its inflation, right? So it's a lagging sort of inflation indicator, because uh, a lot of the oil purchases are actually front run, right? So they would have to accumulate a lot of them based on certain periods. They don't just buy it when they feel like it. They have to buy bulk. They have a timeline of when they need it, and etc. etc. So the prices will likely still be relatively elevated, I think, in terms of what has already been front run, but so that inflation will still be there, at least for the near term. But I think, yeah, like I said, if Friday actually gets signed, then we're going to see a huge gap down for sure in oil. And then very likely everything will come back to more or less normal, right? Core CPI wise hasn't really shown any kind of um, indicator in terms of inflation on that front. I mean, there is inflation, but it's also not it's quite muted, to be honest. So that's good, because obviously that means the inflation is really created by the energy side. And once this kind of blows over and a few periods that goes by, things will kind of stabilize back again, right, after the lag has been in place. So um yeah, so there's still going to be second round effects, obviously, even with a ceasefire. So yeah, I hope that makes sense. But obviously, with this right now, the fear of inflation has been reduced, right? We can clearly see that in the US 2-year yield. Um, we actually see a nice pullback here. Um, we're still elevated for the most part. We did gap down, but still elevated. We're now at this area again of resistance. So we'll see, right? If we continue to head lower here, but obviously, markets are quite optimistic about this. You can see a pretty strong gap down here in the 2-year yield. I believe we can also see that in the 10-year yield. Um, right. So um, on top of that, obviously the DXY did take a bit of a sell off as well, including the rest of the other currencies naturally, right? So you can see how it's really sort of correlated, right? For the most part, at least of recently, the SY has been moving up because of the fear of inflation with high interest rates, with inflationary risks that causes the central banks to be a bit more hawkish, and with that causes the currency to actually move higher, right? And this is very, very apparent in some of the bigger runners, I think. would be the Australian dollar. We can see for the most part it has been running really, really nicely here. We can actually see that clearly on AUD and ZD, right? Because they have decided to obviously increase interest rates a lot faster than most of the other countries. And what we can see is that it's actually, that's kind of the move that we've got, right? A strong push to the upside here with barely any pullbacks. Um, so that essentially is sort of the example that I'm trying to give. When there's high interest rates, that causes, or the forward looking of potential rate hikes, that causes the currency to actually move along with it. So obviously now with this gap down, it's because inflationary pressures and or risk, markets are more optimistic, so that reduces that fear, and with that, that drops yields, that drops the dollar, that drops anything that's inflationary to that. So oil also took a sell-off, and what you'll see is gold obviously will be reversing, right? So I was looking for a short on gold. For the most part, metals have been moving extremely well on the short side. Couldn't capture it on the gold, but I was looking for this short here. But with the current optimism in place, I wouldn't be shorting it right off the bat, right? So this is not a meme play that I'll really be looking at as of now. So I'll probably put this on the sidelines. Yeah, so that's that. But potential plays that I'll look at for longs would be US 30 for sure. Stocks are something that I want to be involved in. And currently I'm still in my AUD NZD short that I was in since last week. Was doing really nice, and then now we're very, very choppy. And obviously with the current sort of news that we've been getting, it's a bit hard to really justify this particular play, right? I'm still holding on to it, but I wouldn't be surprised if actually we see Australian, the AUD side start to push up. I believe, I haven't checked this chart yet, but one of the best risk on to risk off flows that I like to use is the AUD Swiss franc play. Okay, interesting. So looking at the daily, we actually did push up here, but then now we're kind of pushing down. So that's interesting. I was not expecting that, to be honest with you. Could just be a pullback for higher prices, but usually if we are a little bit more risk on, the Australian side would see a little bit more pressure, but it could just be sort of, capital flows and adjustments and repricings and things like that. So regardless, I mean, we don't know, we don't have the full picture, but that's fine. But in any case, if that's the case, then I'm not really that worried to just jump in and sell my AUD and ZD trade. Obviously, AUD and ZD, they are both commodity linked currencies, right? AUD will be linked to more gold, iron ore, more precious metals, right? And it's very related to the China market, which I believe for the most part, if we take a look here at the edge finder, give me a second. We can take a look at the economic heat map on China. Oh, I think this is the one. Okay. For the most part, it is pretty bearish, right? But CPI wise, came out bearish, right? We came in softer than expected. PPI came in as expected, but we can see that manufacturing PMI actually came in weaker than expected. So overall, there's still, not strongly bearish, but the China market has not been doing really well in terms of economic data. It's not been doing as well as it used to be. GDP growth is very neutral. Manufacturing PMI is down. Retail sales is also down by a pretty large margin here. They were expecting a 2 forecast, but now came in at 0.2 with a surprise of 1.8 negative, right? CPI is also bearish. Unemployment, I mean, yeah, a little, it is bullish, but I mean, not really by a large margin. We're still above that 4%. So for the most part, quite bearish indicators, and you can clearly see that get affected on the Australian side as well, because they hold about 30% of their exports to China, if I'm not wrong, in terms of commodities. And what we can see here is that for the most part, Australian dollar has also been rather bearish. But the RBA, from what I've been reading so far, is still very, very hawkish and restrictive. But obviously with weakening indicators over time, that is going to definitely bring the Australian or the RBA to be a little bit more dovish because their focus is on inflation, right? They are trying to control that, unlike the US, where they're trying to control, they have a dual mandate where they're controlling price and inflation, employment stability, and price stability. But most of the other central banks are more of a single mandate, right? So the main focus on the Australian side is inflation, and that's what they've been really focusing on. That's why they actually did a three rate hike early into Q1, right? So, but for the most part, we can see that Australia's side is also extremely weak. So, I mean, for the most part, there's really no, no real push from an economic point for Australian dollar. I mean, the NZD side, if you look at the Kiwi, for the most part, is actually more bullish, right? Manufacturing PMI did come in softer than expected, but for the most part, retail sales came in good. CPI, PPI is still elevated. Unemployment is also bullish. Um, and GDP growth has been intact, and CBS's PMI as well. But for the most part, there is a little bit more bullishness, but we're starting to come towards an equilibrium here. You know, it's not a really big margin as it was, I think, previously when the manufacturing PMIs was actually really positive. I believe that actually brought the NZD or the Kiwi a lot higher. I think it was somewhere around 70% bullishness. So that manufacturing PMI data really did push the Kiwi down. The Kiwi, I believe, their commodities is mainly towards, I want to say, softer commodities. So things like dairy and things like that. But um, let me just double check again. Yeah. So it's linked primarily to soft commodities, unlike the heavily mining dependent currencies such as the Australian dollar. The Kiwi relies heavily on agricultural products, right? Um, I don't really look at those assets like corn, sugar, things like that. But yeah, but obviously for the Australian side, if we're actually seeing some growth in metals, we're gonna also see some growth in AUD, and metals like to move up when there is low inflation, low inflation fears, and positive bullish news and forward-looking indicators. Then that actually does move up. So markets are obviously forward-looking, so they're very very optimistic. Obviously, they're already pricing in the bullishness. So that can really change this trade to reverse against my short, which will be sad, but it is what it is. I will have to take a very small loss here, and this trade will still be a profit, my initial trade. So only the scaling will be taking a very, very small loss, right? I mean, this is probably like a quarter loss of the main risk I have here, and then this will still be a profit. So it is what it is. That's just trading, guys. I mean, I definitely wish that I was a little bit better positioned with metals. I think short metals like XAG and stuff would have been extremely profitable for pretty much the month. But it is what it is. And for now, okay, so going back to the plays that I'm looking at right now, if we take a look at the top setups here. So looking at the Dow, this is something that I'm looking at definitely for longs. I'm looking for shorts like the euro, US dollar. Those are the ones that I'm looking. Pound US dollar, definitely. AUD CHF, I probably stay away from that. One is the carry trades, the strong carry trade differential there is, sorry, wrong scanner here. Yeah. All right. So if you look at the carry trade here, it's very, very high for the Australian side. Let me just zoom in here so you guys can see. So AUD Swiss franc 4.10%, right? So it's a strong, strong, strong carry trade for the AUD against the Swiss franc. So that's not something that I'm really too keen in pushing for a short right now. CAD Swiss franc, I think it's a good idea, but I don't really have any plays right now. And it is kind of pushing higher a little bit. I think it should be selling off now with oil kind of pushing to the downside. Let's take a look at CAD CHF. Yeah, okay, well, great. Okay, so yeah, I did initially want to look for a short, but it seems like we're already selling off. We tapped into the nice level of resistance here. Um, and now we're actually, selling, potentially selling off here. I would not mind trying to look for scale-ins, but we're already quite far into the range. We're probably going to get some sort of pullback from this level, I believe. So I'll see, I'll wait and see if we can get something here. I'll probably do it like this and see if we can get a pullback into this level for potential short. What I really like about this, not I mean the chart doesn't look that great, but right now what we can see is that all of the moving averages have confirmed bearish, or at least the potential beginning of that, and at the same time we had this pullback right into the moving averages and then we sold off. So I really like that pattern, and I would really want to see essentially this is what I want to see, price move up to this level here, and I'm probably just gonna write it down all the way to this level area of support here from the 2nd of March. Okay, so let's take a look at CAD Swiss franc. So obviously CAD also has a higher interest rate as compared to the Swiss franc. If you look at the carry trade scanner again, you can see 2.25%, but not everything is just about a carry trade. We also have to look at other indicators like the central bank tone, which will be largely driven by economic data. So like the CAD, they're looking at controlling inflation, right? That's the main point here. And what we can see is that we're bearish across all fronts. Right, institutional activity, we've shown it's just strong bearish, not even just by latest positioning, but also the weekly positioning. Retail sentiment has been also a great indicator as well, because they're actually, I think, more long on the CAD. So we can take a look here at the crowd sentiment real quick. If we look at the retail sentiment side, where is the CAD? Okay, give me a second. Yeah, so 91% of people are long CAD, right? Retail. So we want to go against them because retail sentiment is great as a contrarian signal, as it says right here, and that's something that I use as well on this. I think it's a great tool as well to kind of give us an idea of, okay, retail is super bullish on this, but obviously based on the data we follow the fundamentals, and that's just not the case, right? So yeah, the CAD is something that I'm looking to potentially take a shot in. I think it's great with the idea that obviously oil is also kind of selling off. I think that would be a great play here as well. So some of the other things that I'm also looking at is euro sales, GU for sure, if I can find a entry, but it's hard to say. It's not in the nicest pattern right now. Obviously, okay, so we're already at this area of resistance here. So I don't really want to chase this move. I would like to wait for a entry. But what we can see is that, yeah, price has moved really nicely here. Pound has been pretty weak for a while now, and um, we've already tapped into our key area, which is actually prior support. If you look right here, we can actually see that very clearly here. This is sort of the area of support that turned into resistance. So I like it from a technical aspect, and we have already seen a confirmation here, but it's just not like the cleanest pair, I would say. It's not showing a nice trend. It's actually sort of been in a range for a while, but I think there's still some really strong indicators here for potential short. If you take a look at the pound to US dollar, we can also see that quite clearly here. Just give me a second. Right, so we can see inflation wise weaker than the dollar, job market's also weaker. Not much from the institutional side, sentiment side. Economic growth is also neutral. So I mean, there's really nothing going for in terms of a bullish reason for the pound. So this is still something I would not mind to take a shot in. Would like to just wait for a confirmation here. So initially, I was looking for a trade here, but obviously with the recent positive backdrop, that really caused a lot of the capital flows to kind of shift away, um, and away from any of the other currencies. I mean, they're basically kind of looking towards more high beta assets here. So so this is just really sort of the unwinding, I would say, and shift of capital flows. But now with the potential you know positive deal making here that's with the Iran and US side, we can really start to focus on the macro, right? Without a lot of these geopolitical headwinds, right? I mean, like I said, it's not confirmed yet in a sense where they haven't signed anything, right, until Friday. But at least for now, the macro would hold up a little bit better with less of the outside noise, right? So pound is still very, very weak from a macro standpoint. I do need to see it really, really sell off here. I don't really like the fact that we've actually took out um the fib area, but at the same time, we are tapping into an area of resistance that have been resistance for quite a bit of time here. So there is a pretty strong level here of resistance. So that's sure valid. Um but I would like it to come back down into these fib levels, ideally below that 61.8. And if I can see a pullback into that, I'll look into an entry on the lower time frames. All right, so let me just put an alert here. Like it to be, yeah, right here. So the moment we actually come down, we close below, and then any sort of pullback I think would be valid to take shorts for the pound. So the pound is a big one as well for me. The euro as well, as you can see, I'm watching it currently right now. So we already at our fib level. So let's just see, right? I mean, like I said, this one I still need to wait. I want to wait for this to really show some weakness here. I'm probably more I won't be shorting both together, so it just depends on which one happens first. I do like the EU side. We are at that fib area. We're at that point of control as well in the volume profile. We can also see from a technical standpoint, we're actually at an area of support as well. Very nice area of support. Um, so we'll see, right? I mean, this great technical indicators here, and this area of support actually goes back a little bit further, I believe, towards this area of resistance. So it's been resistance, and then support, right? And then started a hold, and then now we're kind of going back. So it does look very clean here from a price action standpoint. We're also below the moving averages. Um, we're also really strong. In terms of the Bollinger Bands, we're also right piercing into that the high channel right here, or the second. I believe this is based on 2 standard deviations of the and then the middle line is the 20 moving average. So when it goes above that second or I guess you can, yeah, second standard deviation, we're piercing through that channel. That shows that it's a very, very in a sense, not say a rare occurs, but usually it comes because it's such a strong volatility move that can act as an area of resistance as well. But obviously I don't use it just on its own. I like to pair it with other sort of technical indicators, like the moving averages. It has to be bearish for me to be interested for a short usually. Unless there are other real fundamental drivers for my reasoning for it, like the AUD and ZD side, there are some real fundamental drivers initially. There also sub areas of support, resistance, anything that can really add on as a confluence, right? But what I really, really like though on the EU side is that we're actually, right at that moving average, and we're actually kind of shifting away from that 200 moving average, right? So it's looking to still be holding up nicely here, I would say. And so still very prime for a short. I'm still definitely looking for a short. Um, and we'll see. I would really like this though to go. And then from there, we can see if we can get some sort of entry potentially for a short here. And other than that, to be honest, gold I will not be I don't think I'll be trying to short metals right now. Uh, NZD probably not. I think it's, NZD, like I said, it's more risk on, and if the environment is shifting towards more risk on, that's something that I don't want to be involved in. We can see that the VIX is actually back to the lower end of the range here. Um, and we can also see the G7 volatility indicator right now as well, also kind of going back down towards the lower end of the volatility range as well, right? So I don't think this is essentially a risk off as environment for right now. Right, we're seeing volatility, we're seeing the fear kind of being pulled back away from the market, right? Um, yeah, so I think for now those are the plays really. To be honest, I don't really see anything else. So it's just really EU shorts, GU shorts. Looking for longs for the Dow. Yeah, I mean that's really about it. And then the current position that I have right now on AUD and ZD. So, anyways, um, yeah, I mean those are the plays right now. I mean, remember, trading is risky, guys. So, I mean, whatever that I'm sharing right here is what I'm looking at. My opinion. I'm not saying that you should copy me or anything like that. Those are just the ideas that I'm looking at right now. So, um, take it as you will. If you do end up copying these trades, that's entirely up to you. It's risky. I don't hold any obligation in terms of your losses, right? I mean, this is just a commentary, so I just want to make that clear, guys. It is a very volatile market that we're in right now. So be very, very careful. Manage your risk appropriately. Just don't jump into anything unless you have the right research, the understandings, and why certain assets are moving. If you understand why these assets are moving, how they're correlated, um, you're gonna fare very well, right? Um, yeah, maybe I'll end it off with the bond side. What we can see is that we're also seeing the bond market sort of shift down, except for the yen, because there's an expectation for actually a rate hike of at least 1%. So I don't think that would change on the BOJ side. But for the most part, the rest of the other currencies here, or the G7 names, we're actually seeing you start to sell off as well, right? So that's yeah, I mean that's where we're kind of at right now. I wouldn't say this is essentially very bearish for the yield market. For the most part, we're still extremely elevated. If I move back here, we have been moving up for a while now, since last year of March. So we'll see. I mean, if this starts to really push up after Friday, then we know more or less the markets are already pricing in a potential at least a rate cut in the future. Okay, so be aware of that. What else? I feel like I'm forgetting something as well. Okay, but I think for the most part that's that. I don't think there's anything else that I'm fully missing here. Oh, right, excuse me. The something to take note as well, guys, is the you know, the economic calendar that we should keep an eye on for the week. So this week is going to be a very strong central bank week for a lot of the other names, um, like the UN, the RBA, so BOJ, RBA. We're going to get inflation readings for the pound, so that's going to be very, very interesting. For the most part, the federal funds rate is likely going to be capped at 3.75%. That's something that everyone's already pricing in. We're going to obviously have a statement made by Fed Wash, or I mean whatever. So he's going to be that's going to be very pinnacle. I think even though right now sentiment is a little bit more risk on, but if the Fed is still very restrictive and doesn't really show any sort of dovish signs, then that can really drive the US dollar as well. So be aware of that. We got GDP coming in as well this week for the Kiwi pound monetary policy. I think for the most part, the pound, they're looking to keep it at the current rate as well. BOJ is looking to hike it to 1% by a very, very large margin here. So no scare there, I would say. Swiss franc, I mean, this is just it's really nothing to be aware of here at that point for Swiss franc. I mean, they're probably not going to do much there, so I don't think there's really a need to really be aware or focused on that. But yeah, still good to be aware of, obviously, but I don't think they'll be doing much there. Pound monetary statement as well is going to be very, very important. So this is basically a central bank week for the main currencies, right? So this is a very, very important week to keep an eye on. Okay, very, very important week. And yeah, um, from that will be it, guys. So yeah, thanks for watching again. I really do appreciate it. Yeah, leave a comment if you want to talk about anything in my next video. I would not mind making some videos that maybe is of your interest. Um, but yeah, please do subscribe. It will really, really help us out. We're a small growing channel here. We just love markets. We're passionate about it. So yeah, just keep support us if you want. Like our video as well, share it. I think it'll be help us a lot as well, right? So all right, thanks guys. Cheers.